Welcome to Disruptive Successor, a show for next generation leaders in family businesses and entrepreneurs who want to disrupt the status quo and take their existing business to a whole new level. We all know that what got us here isn't going to get us there. This show will provide inspiration, advice, and resources to help you create massive impact. This podcast is sponsored by myself, Jonathan Goldhill, and my company, the Goldhill Group, where we provide coaching for growing companies. I'm Jonathan Goldhill, and my purpose is simple: to guide entrepreneurial leaders in family businesses towards more freedom and fulfillment. I want entrepreneurs to get clarity around the changes that will make them and their businesses more successful so they can experience the same freedom I've enjoyed in my life. Our proven practices challenge business owners to think differently about their business and how they're running it, and quite literally become game changers in our clients' companies. Learn more at thegoldhillgroup.com website, where you can schedule your free strategy session. Hi, it's Jonathan Goldhill, and welcome back to another episode of the Disruptive Successor Show. So episode 156 was about how to buy a good business at a great price with Richard Parker. In today's show, I'll be speaking with a buyer who helps other buyers buy businesses. Businesses with between $1 to $2 million of EBITDA are too large for unsophisticated mom and pop buyers and too small for private equity firms, making this a highly attractive acquisition market where the multiples are high and the addressed need for capital in this niche market is low. My guest today is Kevin Bibelhausen, a principal at Fruition Capital, a firm dedicated to working with entrepreneurs to acquire a minority stake in stable operating businesses across the United States. Kevin is a resident of High Point, North Carolina, dubbed the home furnishings capital of the world because twice each year, the city hosts the High Point Market, the world's largest home furnishing trade shows. Before starting his own investment banking business, Kevin spent over a decade in corporate leadership roles before a health crisis led him to small business ownership and investing full-time. He made his first acquisition in 2022, acquiring Heritage Fabrics, a textile company based in Concord, North Carolina, in which he is an operating partner. He is passionate about helping first-time entrepreneurs raise the equity they need to close their business acquisition and start the next chapter of their lives. Kevin, welcome to the show today.
Thanks, Jonathan. Good to be here.
Yeah, so I wanted to give that intro. I stumbled on the word resident, but I thought it was interesting to tie together the fact that you left this corporate career. Here you are in a town that most people probably don't know, except as a guy who's been working with business owners for so many years. I know the name. I've never been in North Carolina, but I know the name High Point because that's where people go to sell their furnishings. And it is also connected to the textile industry, where a lot of those businesses many years ago moved from New England down to your, can I say, neck of the woods? Is that fair to say?
Yeah,
and
very
so
fair.
Interesting that you made your first acquisition there. So let's just back up. And I really want to get into the story of what you're looking at buying and why, and maybe we'll get into some case studies because this is really germane to family businesses. But I always like to start with, who is this person I'm talking to? Who is Kevin Bibelhausen? How did you arrive at this? And what's your backstory? So tell us how you got here. A little short story.
Yeah. So I'm a like many entrepreneurs, I think I'm a product of corporate burnout. I came into after college, I started in a healthcare company, started in sales, and then moved into technology and did a bunch of different roles that eventually had me, as the deputy chief information officer for a large health system. But along the way, I kind of got obsessed with this idea of working for myself, doing my own thing. I'd always had that inkling, But to me, entrepreneurship was equated with startups and Silicon Valley, and they were inextricably linked. And I just didn't want to do that. I didn't want to go and start the next dating app or the next social media app or do it. Just wasn't interesting to me. But what I discovered this book that was published in 2017, which is aptly titled "The Harvard Business Review Guide to Buying Small Businesses," and it kind of changed my perspective on all of this because it was one of the only resources out there at the time that spoke to the layperson like me. Like, I'm not from finance, I'm not from investment banking or anything like that. So I come from I have an operations and sales experience, and so this was all very foreign to me. And I fell in love with the story in this book where a guy was going to buy a porta potty company, and he was so excited about buying this. And I read this story. I'm like, this is exactly what I want to do. I want to go buy something that's durable, cash flow positive, that is already has product market fit, already has a customer base, already has a reputation, and then I could take it over and use my skill set in operations to actually scale and grow the thing. So I took what I had learned from the book and from what little I could find on the internet at the time, 2017, 2018. And then I found a business that I wanted to buy and went through the whole process, the SBA loan process and the financing, all of the diligence process, did it all. But then I got to the end of the deal, like we're about to get married at the altar, and then the deal falls apart. Basically, the lender came back from underwriting and they were like, we actually need twice the amount of equity that we thought. And I said, that's every nickel I have. So I don't have any more equity to give you. And I didn't know about raising money at that point or doing anything. So I just let the deal walk, which was tough, but I sort of licked my wounds and went back to my corporate job and did that for a few years. But like you said in the intro, I had a health crisis right around COVID, and it really kind of refocused my perspective to is this what I want to be doing? Do I want to be, doing what I'm doing at the hospital? I still want to be working for myself? That was the most important thing to me. And so I started another search in 2022 that ultimately ended up in me purchasing Heritage Fabrics here in Concord, North Carolina, and moving my family from Dallas, Texas to just north of Charlotte.
And just for some perspective, how long did it take you to find and close the deal on Heritage Fabrics versus the first go around? Because it's been my experience and I base it on a client who took many years to build a company that was a market dominating leader in Los Angeles in the window treatments business. It was a $2 million company. That was the size of the company. And then he went on to start a mountain bike manufacturing company. And he eclipsed that $2 million in sales of that other company very fast. Now, one was a service business, one was a product-based business, so you would expect the numbers to be bigger. But that mountain bike manufacturing company got to 20 million, made it in the Inc. 500 fastest growing companies list. And I said to him, everything you learned from the $2 million company, everything we've been working on, because I was coaching him for a while, is like you're immediately going to put that into play. And so the mountain bike company is going to scale that much faster. And so I'm guessing that you did your due diligence in half the time, made it, and made a smarter purchase. That's my guess.
Oh, certainly a smarter purchase. No question about that, because I can say, finding the second deal took me a little bit longer, but that was because the first deal I found, I kind of just, I went on a broker's website and I found something that looked attractive, and I'm like, I could do this.
Okay.
And, it was very, very little looking of deals, very little, actual going out and looking at a bunch of sims, which is what everybody tells you that, okay, don't do that. Go out, go out and like look at two deals, and you're like, no, I'll take this one.
Sims, by the way, for folks who are listening, is confidential information memorandum.
So I certainly found the first deal quicker, but I didn't know what I was doing. And so going through that whole process, going through the financing and the diligence and everything, only made I just remember feeling it was sort of like not deja vu, but I felt like I had done this before, even though we hadn't closed on the deal, I had
Hmm.
at least been through I've been through the ringer. I'd been through all the process, to kind of get the deal from A to close.
Got it.
So it's a much bigger deal, about 10 times the size of the deal,
Mm.
and a much better quality company, better industry, better people all around as far as, the deal team that I had, the sellers, everything, I mean, the experience matters so much there. And even if it's not successful experience, it's still experience.
Yeah. So let's profile some of the companies you've bought and let's talk about it because it's very interesting. You've gotten into niches that are either largely not very well aggregated. So
Yeah.
so that makes sense. So your first investment was a towing and repair and mechanics business in Virginia, an
Hmm.
acquisition price of 7 million plus, and you guys put in about almost 10% in that deal. And you
Yep.
have an entrepreneur that came to you, I guess, looking for partnership. Um, so that was, and then let's just look at the next few. Then you did a manufacturing of specialty wire and cables that was outside of the Boston area,
Hmm.
where you found a Harvard MBA grad or they found you, maybe, and they're your second investment. The third one is a metal fabrication somewhere near me in Southern California, another similar size investment. Again, someone who lives in California, this case, someone who was degreed and came in as the acquisition entrepreneur. So we're
Hmm.
fine. We're seeing, and the next one was a company a commercial company that is cleaning the hoods in kitchens, commercial kitchens, I'm guessing, in Salt Lake.
Yeah.
And
Yeah.
again, a few $100,000 and then another towing and recovery. So it's a really varied set of businesses. And I could imagine that some of these might have been family businesses where there was no next gen to take over, or there wasn't a competent person. And so a young person found them
100%.
and then
Yeah.
approached you. Tell us how that, like how did some of these deals go down? What's the
Yeah, I'm trying to
pattern?
remember if I don't want to make the blanket statement that they were all family owned. But I mean, certainly the vast majority of them were, and you could see family names, in the titles of
Hmm.
these businesses, right?
Hmm. Yep.
So you're 100% correct then that a lot of these businesses that are going up for sale right now with retiring baby boomers, if they don't have children, or children don't want the business, as is honestly more common because they've seen what their parents have gone through and they're like, nah,
Right.
not for
Right.
me.
Right. I don't want to
Um,
work that hard, or I don't want to work that
yeah,
stupid.
yeah. And so those are the kind of deals that we ended up getting, but we just from the list that you ran down, right? Like
Hmm.
they're boring, they're not sexy,
Right.
but the thing that they all have in common is that they just spit out cash.
Right.
And that's what, they're, I can't say they're all asset light businesses because that's not entirely true. We look for more asset light businesses, but like a towing company, the
Right.
the kind of companies that we purchased, quite a bit of capex in those. But
Right.
but yeah, they're all family businesses that our younger entrepreneurs want to come in and then be the next generation. This is myself included. This is what I did, is
Hmm.
take the hand off from another family and keep it in a family run environment. So now even at Heritage, I've got, my wife occupies an office a few doors down, and we, work on the business together, and she's got her own things kind of going on too, but we collaborate on things that are going on here, and we have our dogs in the office, and
Hmm.
we do all that kind of stuff. So I mean, it is a family environment, and the same is true for a lot of the entrepreneurs that knock on our door.
So let's talk about some of the value drivers in these businesses. Um, what kinds of things are you looking at? I'm noticing a pattern of, they have recurring customers, which we know adds to value because it's got a stable income base. Um,
Yeah.
but there's a lot of other value drivers, like how much dependence is there on an owner or a single key employee or a single or of concentration of customers or suppliers. What are some of the things that you're particularly keen on that businesses who are listening to this should be thinking, huh, maybe I need to make my business more or less owner dependent, more
Hmm.
recurring customer driven, or just larger? I mean, because I found that the single biggest thing is the size of the company. The bigger the company, like the more likely you're going to get a bigger multiple.
Or
Kind of,
yeah,
right? It's kind of an obvious.
yeah.
It's like people want to know, like, how can I increase my profit? I'm like, well, raise your prices because everything else stay the same. I keep your
Yeah,
volume the same, raise your prices. So,
yeah.
what are the things in that you're really most keen on that owners and acquirers who are coming to you ought to be thinking about?
Yeah, I mean, you mentioned a couple key things. The first one is supplier and vendor diversity. Obviously, we don't want to have huge concentration on a couple different customers. We'd really like, no customer to be, I'd say 20% of revenue is
Right.
probably at the high end of what we would look at.
Understood.
Most of our deals do not have anything like, I mean, because again, we're looking at a larger price point, right? We're looking at businesses between $1 and $2 million in EBITDA.
Mm-hmm.
So it's incredibly common for smaller businesses to have, say, 30 to 40% in one customer, and that because they just haven't reached that scale yet to not, be so dependent. So if you're smaller than $1 to $2 million in EBITDA, the answer is just okay. Well, do some business development and find new customers and increase your revenue that way away from that other customer, right? But
Right.
if you're in that $1 to $2 million range, yeah, I mean, you need to be diversifying both your customers and your suppliers. I mean, we've got at Heritage, I can say specifically, we've got 12 different factories that we work with at least, and we're adding a few more and dropping others. So we're constantly kind of reevaluating that supply chain and making sure that we, both have. So we're importers in my business, and so
Okay.
we've got people in India and in Turkey, and one of my goals is to reduce the number of mills in those countries, and then maybe we'll nearshore something, or we'll get some different geographical representation because you never know what could happen geopolitically in these certain areas. So
Of
it's
course.
and look at COVID. Look
Right.
at how COVID impacted,
Sure.
especially importing and the
Right.
price of containers and everything. Right. So
And
being
look at
able to
what's
get
happening
something out
right
of
now. Also, as the Houthis are shooting
yeah.
ships going through the Suez Canal, so they're going all the way around the Cape Horn.
We
So,
actually talked about that on one of our recent sales meetings,
mm,
where people were asking about supply chain interruptions, and we had to talk about some of the geopolitical issues going on, and so
right.
yeah, it's top of mind for all of us.
Right.
So diversifying your suppliers, diversifying your customers for sure. Let me tell you though, what I think is the most attractive thing,
Okay.
is the owner dependency,
Yeah, I think so
because
too.
and I mean, speaking as a buyer.
Hmm.
Okay. And then I can put my investor hat on here in a second. But speaking as a buyer, the business that I bought, Heritage, the owner it was right during COVID. He wasn't in the office very much. His wife was having some health issues. And so for 2 years, he wasn't really physically present in the business. Now, that's a negative thing in terms of the performance of the business because the business did dip a little bit, but
Right.
there's also a ton of opportunity there as somebody like me coming in who says, "Well, I'm going to be there 7 days a week," which is kind of the way it rolls for a while.
Right.
I'm going to be there all the time. I'm going to be the one grinding. I've got kind of youth and time on my side. I can go do that, and there's alpha to be generated by just being there and actively managing the business. But it sure is nice to know that you don't have to be there, that you're not integral to the day to day of the company, and especially for somebody coming outside of industry. So, like I said, my background was in healthcare and in technology strategy and operations. Okay,
Hmm.
nowhere in there did I say textiles or home furnishing,
Nothing.
right?
Right.
And so it's very important that when you buy a business outside of your sort of scope of experience and expertise, that there's a management layer, a team in place that knows what they're doing. And you can come in, you can learn, and you'll be fine. But like you need that core team that can really run the show without you, so that you can, if you need to be gone for 2 weeks. I travel a lot and I meet our customers. I'll be gone for weeks at a time sometimes. I just got back from a trip overseas to a conference, and then came back and visited customers, and I was gone for 2 weeks. Uh, the business did record numbers in January.
Mm.
We grew 20% over last. I wasn't here for half the month. Like that's what you're looking for. When you're a buyer, and then as a seller, or as a potential seller, or even just somebody just looking to optimize the value of your business, you need to look for ways to remove yourself from those critical processes. And so, it's scary, it's hard, but that's a huge value driver in the business.
I agree. I think it speaks to a lot of the growth potential in a firm
Yep.
for an owner to remove themselves from the day to day, for many years as a coach, I've been talking to my clients and using phrases like, view the business as a separate asset from yourself. And
Mm-hmm.
there are plenty of people that I know, some near and dear and very close to me, who see themselves as the asset, and it's their name on the door, and they can't separate those two. And they give me a lot of pushback when I say, like, how are you going to transition this business if it doesn't transition to the next gen? you know and so much of what you do is in your head, like, going to be challenging.
Yeah, yeah, and I'll even piggyback on that and say I think I'm one of those people that if my name was on the door,
Right,
I would feel a heck of a lot different.
right.
And I think that's part of the reason why I didn't start my own company. That I was not going to start Kevin's consulting firm, or Bibelhausen Partners, is because then I would be inextricably linked with this business, and it would become a huge part of my personality, right?
Yes,
Here I can have a little bit of distance.
yes.
I think personally, I know I need that, because with if you have that sort of founder syndrome where there's no difference between you or the business, then it's your whole life,
Yep,
and
yep,
forever shall it be.
yep. And to all those who are listening and kind of questioning my integrity, yeah, my name is on the door, and yeah, that this is inextricably linked to me. But I've not built a business that I ever thought was going to be. Well, maybe at one point I thought it might be scalable, but I quickly dispelled that notion that I could turn it over to other people.
Yeah,
And yeah, when I'm done, I'm done. It goes away.
it's not a business that'll sell, and
No,
that there's nothing wrong with that. That's
exactly.
perfectly fine.
Exactly. All right, let's go to the macro economy and talk a little bit about shifts in the economy from just industrial changes, uh, tech, regulatory, AI, COVID, M&A. What are some of the things that you and your partners are talking about the most these days? What are the hottest topics that or even in terms of the investments that you own, that you're thinking of, like, hey, we need to pay attention to this? What's a hot topic in your boardroom?
Yeah, well, there's a few things, but like a lot of people's kind of primary topic of conversation, if you're anywhere sniffing around finance, is interest rates.
Right,
Especially my business, my textile business, it does, loosely track new housing. And so with interest rates going up, there's a lot less activity happening.
right.
We're starting to see light at the end of the tunnel, right? As
Yep,
the Fed has promised to
yep,
start doing rate cuts. So
exactly.
that's a great thing. So we're excited about that. Um, I think, the weird thing is that we haven't really seen much of a slowdown in our area of M&A. I think like larger M&A, big boy, we're talking billion-dollar deals, that is slowed down.
Right,
But really in our sector, it's been on fire. I mean, there's been so much activity in the lower middle market, because there's people who need to exit. There's people who, who own businesses that get sick, that have, family changes, that have all kinds of different reasons why they need to exit. And they're not really, able to pick the time where they go on the market necessarily. And there's an increasing level of demand from these, you mentioned we had a kid from a guy from Harvard, who wanted, that's very common these days, is having
Right.
these well-credentialed people exit business school and say, okay, I could go work at an investment bank or a private equity firm or whatever. I'm going to choose to go into small business because that's where I feel like I can create some economic security for myself. I can own my own time. I can do things my own way. I don't have to necessarily do the whole corporate ladder thing. Maybe they've done it. Probably they've done it already.
Right.
And they're just not interested in doing that for the rest of their lives. So there's coupled with the increase in demand, and then the sort of continuous influx of new deals on the market, prices haven't really gone down. So if you're a seller, I mean, I'm not seeing any multiples really decrease. I mean, maybe slightly, but it's in the margins. So it's not necessarily, even though debt is expensive right now, it's not necessarily a bad time to sell, because people are still realizing pretty good values out of their businesses.
Right. Now, I'm noticing that some of your deals seem like they've gotten larger over time in terms of the acquisition price. So what I'm wondering is, are these entrepreneurs, or are you syndicating your investments along with other small, excuse the word, PE firms, but like, are you finding other investment groups to come in and partner with you to make up for, the capital that they're looking for?
Yeah, 100%. So there's a number of different funds that have popped up over the last about 3 years, in this sort of micro private equity space. They're all a little different flavors. Everybody kind of has their own unique style and buy box and the terms for investors and everything. But yeah, for sure, we have great referral partners, and we look at so our check sizes are typically greater than 500,000, lower than $1 million. Right, somewhere in there. Now, some of the deals that, I mean, you've kind of seen in the list, right? Some of the deals require a lot more capital than that.
Sure.
And
sure.
Somebody like I was brought a package the other day where somebody's going out and they're buying a whole, I think it's like 20 or so franchise locations. And they're looking for investment partners. Obviously, we would be a pretty small part of that, multi-million dollar deal. But that doesn't mean there's not great economics for us in the fund. We tend to invest where we have like we take a board seat, we have some say, we do have some oversight and some guardrails. For those larger deals, it's going to be less so because there's going to just be more money at the table and spread across those different deals. But it's certainly a great opportunity. And as sort of the larger the deal, the less risk. It's the smaller the deal, you have more risk at play. So we like being able to sort of step up into those bigger league deals, but still keep our bread and butter at it's probably like under $10 million in enterprise value is probably our sweet spot. Now we've seen things that are higher than that, but it's got to be a pretty unique. It's usually like a roll-up situation or a franchise buyout or something like that.
So how do you go about finding deals, or how do deals or deal makers or entrepreneurs go about finding you? I mean, they happen to stumble upon my podcast. So fantastic.
Well, that's exactly right. That's exactly why I'm here, right? So, I mean, that's 100%. Podcasts have been great for us.
Okay.
Because we're a small shop. And so our first fund was $5 million. I mean, it's not anything to sneeze at, but in the world of private equity, that's nothing.
Right.
And so we're writing those $500 to $1 million checks, which is a large check size for M&A in our space, in that $1 to $2 million EBITDA range. And so by going out on shows like this and just putting our name out there, networking at conferences, talking to entrepreneurship programs and universities, and just having an online presence, we've been able to find some awesome deal flow and investors to support that deal flow. But the deal flow is obviously the lifeblood of what we're doing and because we're writing one of the larger check sizes, well, what does that do? It makes the people who have those larger deals, we're one of the first calls they make, if not the first call. Because we're seeing it I'm seeing deals now that will probably, you know, have an LOI by March, April, but they're coming to me first and sort of previewing the deal. Like, hey, what do you think about this? What do you think about structure? What do you think about, what risk do you see here? How do you think I should do this? And so I'm pretty available. I make myself very available as much as I possibly can to people who are interested in doing this because I remember what it was like, and there's not a ton of help out there, and I want to be able to kind of pay it forward. So our deal flow is awesome because we write one of the larger check sizes in the industry. We kind of get to cherry pick the best of the best, and then our investors have been great. We've done several different IRA webinars. We've brought on a bunch of high net worth individuals, people who are typically invested in real estate and venture capital and all kinds of different alternative asset classes, and we've turned them on to this new way of thinking about small business. We like to talk about investing in Main Street. Like these are Main Street backbone of a city businesses
Right.
that you can directly play a part in. And a lot of our LPs, they've been screaming for the ability to, like, we want to be able to help these entrepreneurs too. So we've already got a network of people who are willing to give their time and energy and resources and network for these entrepreneurs coming in to make sure that they don't fail, to make sure that they're set up for success, which all of our incentives are aligned to help you do that. So we've got awesome investors. We've got great entrepreneurs who are constantly knocking on our doors. I wish we could invest in more deals. That's why we're looking to close out Fund 1 at 5 million and then start Fund 2 in the spring, which maybe March, April-ish, and that'll be a $15 to $20 million fund. So we're gonna 3 to 4 times the size of the first one based on the success of the first one.
Yeah, and so what happens is you a little bit become a victim of your own success, where you end up having to move up market because now you've got more capital to deploy. And how do you stay true to that mission of the same size, the deal size, and the niche that you've piloted and done well with, or I assume, or doing well with? How do you stay true to that as the opportunities require larger investments?
A lot of this, I mean, there's no necessarily guardrail that prevents us from going up market, except for kind of how we feel and what we feel our mission is. Mm-hmm. And I personally, and I think I can speak for the rest of the partners on this. I don't believe there's a better way to create economic security for yourself as an entrepreneur and to take advantage of this unique economic system that we have in the States, where I didn't have a ton of money coming into this, right? Like I didn't have $800,000 to put into my deal. Mm-hmm. I had to raise it, and I had at most maybe 50 grand, that I could put into the deal.
Right.
So the fact that somebody, who didn't have a bunch of cash, who otherwise wouldn't have known what an investment banker was able to utilize a government-backed loan program in the SBA while partnering with capitalist investors who are looking to make a return on their money. You sort of get this two-sided approach to what makes the U.S. such an economic powerhouse, and that we've got the government supporting programs like this that are available to entrepreneurs. The SBA is available to entrepreneurs. Yep. And then you've got the investors who are willing to help with the equity. And together, it just kind of creates this opportunity for a budding entrepreneur that otherwise they wouldn't have access to. So you can buy a larger deal. You can buy a platform company that you're going to look to add on to. I mean, just the ability to completely change your life from a, excuse the expression, like cog in a machine type of corporate role to I'm now the CEO of this firm. I can look at other companies to acquire. I can try and grow this in any way that I see fit. It's pretty exciting. And I want more people to feel that. I want more people to be invested in people doing that, because it's such a life-changing event that is so meaningful for at a personal level, at an economic level, that it changes people's lives. I've seen it. I see it every day. The people that go through this. So to me, that's what, and I think you can probably hear it in my voice. Like, that's what I'm passionate about. I'm
Yeah.
passionate about bringing this capital, to a place that needs it. There's always capital needed in other alternative asset spaces, but I'm
Right.
telling you, this asset class where there's motivated, capable, scrappy entrepreneurs looking to do something, and if you're able to inject them with the right amount of capital, put enough debt on the company, I mean, magic can really happen.
Yeah. So trying to think about what questions people might have as they're listening to this. And I think one question comes to mind is there always going to be an exit? In the deck that you showed
Mm.
me, between 5 and 10 years, there's an exit that's planned. Um, is that the way it has to work for investors to be able to get their return on investment?
So it doesn't. What that really means is, we'll have some kind of liquidity event between years, call it 7 to 10.
Okay.
So every year we do annual cash distributions. So again, remember, these
Right.
are cash flowing businesses. So
Exactly.
we're making annual distributions, and we have, a 7% hurdle rate for our investors. So investors make 7% before we start taking any of the performance profits
Hmm.
in our fee structure. But so there's that cash distribution that's going on. But then there's also, in 7 to 10 years, it could be a sale, but we're not the majority owner, and we can't
Right.
force the sale. And I don't really
Exactly.
want to, for the
Right.
same reasons that, you guys talk about family businesses and stewarding for the next generation. Like, that's what our people really want to do too. There's some that want to hold for a short period in time and flip, but the majority of the people want to hold it for a long period of time,
Hmm.
10 plus years.
Hmm.
And so I would never go to them and say, yeah, actually, you need to sell your business. So what we say is, like, at some point they're going to want to refinance the SBA loan if they haven't paid it off. So when they refi the SBA loan, if there's any outstanding principal or any interest due, we would refinance it, distribute the cash out, and either make a choice to exit that investment or just kind of roll the equity forward. So it doesn't necessarily have to be a sale. And traditional private equity, that's what needs to happen. They
Right.
just look to flip it to the next PE firm
Right.
in
Right.
5 to 7 years. That's not our model at all.
Understood. Well, it's been really interesting chatting with you about all this
Yeah.
stuff. And so was wondering about earlier in the conversation, do the deals that you get done, like if people are looking to find a company like yours and they haven't stumbled upon this podcast, are you written up in like Deal Book or Pitch Book or, um, like Crunchbase keeps track of those early stage investments? Where would someone find, is there a directory of lower middle market, which by the way,
That's such a good
I,
question that I don't know the answer to.
okay.
I, I should maybe. Well, that's something that we should definitely look at.
I mean, where's the
I mean,
directory of these firms? I've never seen one. I thought
yeah.
maybe it might exist in something called Deal Book or something like that, but don't know about it. But all right. So, folks, if you are a B2B company that's been in business for 10 or more years with a history of stable earnings and healthy margins and EBITDA in the $1 to $2 million range, and you're an entrepreneur with a strong track record, you've run a company before, uh, you have you're co-investing in this deal, and I'm sure there's a few other talents that you'll need to have.
Yeah.
Fruition Capital might be a good source for you to turn to.
Yeah, and we're obviously looking for new investors who are interested in the fund. So whether you're looking to be an entrepreneur and take capital and go and start your own thing, or acquire your own business, or whether you're looking to deploy capital passively, I'd love to talk to you. I'm pretty easy to reach. I'm just Kevin@Bibelhausen.com. We'll make sure it's in the show notes, or
Yeah.
however you guys want to handle that. But
Yes.
I'd love to hear from you, wherever side of the aisle you might be on. And by the way, we have people on both sides. We have people who want to go and buy their own business and then have
Yep.
invested with us as LPs.
I'm sure you do. Kevin, it's been great having you on the show today. Folks, thanks for listening. If you got some good value from this show, share it with others. If you know someone looking to acquire a business, reach out to Fruition Capital or Kevin Bibelhausen. And as usual, give us a great rating on your podcast listening application of choice, and stay tuned for future episodes of the Disruptive Successor Show.
This podcast is sponsored by myself, Jonathan Goldhill, and my company, the Goldhill Group, where we provide coaching for growing companies. I'm Jonathan Goldhill, and my purpose is simple: to guide entrepreneurial leaders in family businesses towards more freedom and fulfillment. I want entrepreneurs to get clarity around the changes that will make them and their businesses more successful so they can experience the same freedom I've enjoyed in my life. Our proven practices challenge business owners to think differently about their business and how they're running it, and quite literally become game changers in our clients' companies. Learn more at thegoldhillgroup.com website, where you can schedule your free strategy session. Thank you for joining us on the Disruptive Successor podcast. If you enjoyed today's episode, please subscribe, review, and share with a friend who would benefit from the message. If you're interested in picking up a copy of my book, Disruptive Successor, go to disruptivesuccessor.com.